Hey everybody, this is Matt Kalinsky, CEO of USA Staffing Services. I hope you're having a great day today. I'm coming to you live through Facebook and through YouTube Live. Today we're going to talk about finance when it comes to temporary staffing versus permanent staffing. And really not finance like getting money, but really how do you analyze your QuickBooks or your accounting software and distinguish between your temporary division and your permanent division? And really, where do you put your time? A lot of our authorized dealers who are coming from the executive placement world, they realize that when they start making placements on the temporary side, that they struggle to understand where their value of their time is in relation to that one-off perm placement where they get 15 or 20 grand right away. They know that if they're doing 5 to 10 placements, they can multiply times their average pay. And I've done videos before where I talk about the idea that your placement on a contract, long-term, or a direct hire should all be the same value. You should be walking out the relationship with the same amount of money, if not more, on the contract side. But today, I'm going to go a little bit deeper and talk about how it actually looks in your QuickBooks and how I would recommend you setting up your accounting software to make sure. And so I'm going to just go through a couple basics about accounting softwares and where the different values occur on your P&L, your profit and loss statement. So when it comes to your P&L, your profit and loss statement is kind of like, what's coming in, what's going out, as many of you know. But there's a couple lines that you might be familiar with. One is revenue. And so revenue from a direct hire, DH for direct hire. And then I'm going to put temp, even though we know that this could be long-term temp to perm or contract. But revenue for a direct hire is what are you going to bill your customer for that direct hire placement? So let's just keep the numbers simple. If you make an $80,000 salary placement and you're getting 20%, so 20% of that $80,000 would be your placement fee in that case. But let's just keep it simple. Let's do $20,000 as a perm placement direct hire fee. Your $20,000 goes up here. So if you do a placement and you make $20,000 for it, it goes on your revenue. The next section is what's called the cost of goods sold. And the cost of goods sold in a direct hire is going to be essentially zero. You're not running the payroll on that worker. You're not causing any costs in addition to the payroll. You're just charging your customer $20,000 and the customer pays you $20,000. And so when you subtract the cost of goods sold, your gross profit in this case is going to be $20,000. It's pretty simple. And for most of you who are doing executive search, that's why you like it, is it's very simple for you. If you run a traditional staffing firm, then you have to put all those costs of goods sold on your QuickBooks. So a traditional staffing firm, meaning you're the employer record, you're doing the funding, the payroll taxes. You can have a payroll company doing it, but you have to put it in your P&L. So on the temp side, let's say in 1 week, you do $20,000 in billing. So it's kind of the same thing, or you could do a month or however you want to look at it. Your cost of goods sold is really the cost of the payroll, cost of the taxes, the insurances, anything like a health insurance, all of those things that go into running that payroll, keeping that employee happy, those onboarding costs of operation. And so typically, in a standard operation, about 25% or 75% of your billing goes to the cost of running it. So in rough numbers, about $15,000 is going to your employees' payroll, your employees' taxes, the workers' comp, general liability. And so that typically leaves $5,000. So a lot of people, what they're concerned about is, well, Matt, $20,000 is greater than $5,000. And yes, I agree, $20,000 is greater than $5,000. The main difference, though, is that this is a one-time relationship placement, and this would be ongoing every week or month or year, whatever that value is. And so you have to look at it differently. I've talked to a couple other videos that the placement you make should make the same amount of gross profit per placement. So while this might be one-time $20,000, that same amount might occur for 4 or 5 months to get to that $20,000. But when you're looking at your P&L, I'm talking about all your temporary placements and all your direct hires. Now, the reason why I bring that up is the question I had this week was, Matt, how do I get to $100,000 in profit? I want $100,000 sitting in my account in the next 12 months. And so this was somebody who was coming in from a direct hire, and they said, I know how to calculate it on the direct hire. If I want to make $100,000, I have to do this many placements on the direct hire. It's very simple. On the temp side, how do I do that? How do I calculate it? And so one of the things that I was talking to him about is if you're running a direct hire firm out of your house, and for instance, you have minimal to no staff, you don't need an accountant, you don't need a payroll processor, the cost of running the business is practically zero. You don't have any overhead. You don't have any, buddy looking out to process your payroll, to collect your invoices. It's something you can do on your own. So your net profit comes out to about 20K, maybe a little bit less. So that's great. It's not sellable because you're doing all the work. There's nobody working for you. You don't have any real recurring revenue, but it's nice to pocket some money. And I'm not arguing with that. When you run a traditional temporary staffing firm out of your home, or you're going to need to hire people to run your payroll, your collections, you have to pay for all of the services related to the insurance. And so the cost of everything going on typically leaves about 3 to 5% of your billing on a traditional model. So 3 to 5% of your gross revenue is typically what most staffing firms in America make on their net profit. So if you're the owner of a staffing firm and you're making greater than 5%, congratulations. But on average, over the last 15 years of me doing this, I know that the 3 to 5% net profit is if you're doing everything in-house, you have your own payroll team, you have your own accounts receivable team, you have your own accountant in-house running it, getting all the logistics set up. So our authorized dealers, on the other hand, now, if you're one of our authorized dealers or you're prospecting, you're watching this video, our authorized dealers are making 10 to 12% on their net profit line. And you're going to ask me, well, how the heck are they offering? How are they making almost 4 to 5 times what traditional staffing firms are? This is because they're using USA Staffing as their outsourced operational back office partner. And so what we're allowing them to do is make 4 times or 400% more money in their bank account by using our platform compared to as if they ran it in-house by themselves. So if they had that overhead built into their operation, their account manager, their payroll processors, all those extra costs that you need. So our authorized dealers are making 10 to 12%. So let me go through an example. So the question that I proposed earlier was, how do you make $100,000? So I want to make $100,000 in my bank account in the next 6 months, 10 months, whatever it is. I'm going to go a year because most of our authorized dealers have this as additional income in addition to their direct hires. But I'm going to go through it in a year, and I'm going to say, okay, if you want to make $100,000 in our program as an authorized dealer, how much do you have to bill? And so it's pretty easy, 10 to 12% on average. So if you need to bill $1 million because you're making 10 to 12%, you would get $100,000. So this is your take home, this is your boat money, your vacation money, your rest at easy money. Take home $100,000. You need to bill, or you need your revenue to be $1 million. And so when you break it down by $1 million, the question is, how much do you have to do a week in billing to get to the $1 million? So this is $1 million per year. How much is it per week? And so I did the math here a little bit. It's about 19,000 per week in billing. When you do 19,000 per week in billing, that comes out to, on average, about 480 billable hours per week. Hours per week. And then if you take it one step further, that's about 10 to 12 people. So I broke it down to the point where if you want to take home 100,000 in our program, at least, you would have to do $1 million in billing, 19,000 a week in billing. And our average pay, just to give you some reference, is about $25 pay rate. And the average bill across everything is about $40. And so we actually see bill rates go up and down, but on average, if you look at all of our producing authorized dealers, the pay rate's 25, the bill rate's 40. And so that's how I got these numbers. 19,000 per week in billing, 480 billable hours per week, 10 to 12 people if you take an average of 40 hours per week. So how do you get to, so let me break that down again, because it only takes 10 placements to bill $1 million to take home $100,000. Now, if you did this in-house, if you had the accountant in-house, the payroll processor, you bought the software needed to file your payroll taxes, you did all your accounting that you needed to do, and you paid that controller and then CFO and all that, you're going to take home 3 to 5%. So this is our AD program. If you did a traditional model, you take home 3 to 5% of that $1 million. So you're talking $30,000 to $50,000. Where with our program you can make that $100,000. So traditional model, as an owner of a staffing firm, you would be making $30,000 on the $1 million in billing. With our authorized dealers, they're making about $100,000, so about 3 to 4 times more money. So when you break it down like this, 10 to 12 people. So you're gonna ask me, next question is, well, Matt, I only have to do 10 people a year total, and I make $150,000 on my direct hires or $200,000, and that's great. Think of this as the same value as you are. So if you want to double your income, you want to have half your income from direct hires, half your income from temporary. The way to do that is to make this almost the same or a few more placements on the temporary side as you're doing with your perm side. So if each candidate has the same value. So on the direct hire, I'll touch base on it really quickly. If you're making 20 grand per hire on your direct side, you should have in your mind that your profit on your temp side should be 20 grand or more. If you're giving your customer terms, if you're extending terms to 3, 4, 5 months, the take home money should be more than 20 grand. So get over the fact that, yeah, it might be a smaller dollar amount per week. And really, you have to consider the whole picture, the placement of the worker, whether it's a direct hire placement or if it's a temp hire placement or contract to temp to perm placement. The placement is where you should calculate your money that you make per candidate. And so the value of the candidate should be the same. So if you're making 10 to 12 placements a year, you could just double that and you'd make your contract. But the difference is you're going to have steady cash flow. And every single authorized dealer who starts offering contract workers always gets more direct hire business because they have constant contact with their customers. They're able to have reasons to go visit the customer. They're walking in new candidates to the office for temporary to perm placement starts. They have a 16, 18, 20-week window of communicating with the customer. They're going to get at least 1, 2, 3, 4, 5 new direct hire placements. So, the value of that really stands by itself. But, the key is you could be $1 million in billing, $100,000 in your pocket with only 10 to 12 temporary placements in the field. So if you feel like this is something that you want to learn more about, please feel free to contact us at usastaffingservices.com. You can contact me or follow me on social media, YouTube, LinkedIn, Facebook. We'd love to hear from you. I'd love to answer questions specifically for you. And if you have any further questions on how to set up your P&L, I'm happy to go through it with you in person or via video. But thank you for your time, and I look forward to looking forward. Thanks.